Hi again. Today I just want to give a quick brief overview of the AutoTrading functionality that this Zone Trader Expert Advisor has. So in front of me I have the Euro-Dollar daily chart. I'm just going to drag the Zone Trader Expert Advisor onto the chart and load up a demo set that I have and OK it. This should display all the zones for each time frame I'm looking at. So here we have the daily chart. If I scroll down, I'll give the 4 hour, 1 hour, 30 minute, 15 minute. So I'm going to stay on small time frames at the moment, just to show you one parameter that might be of interest. If you scroll down to the bottom of the list, you can see that there's two parameters here. It says calculation highest time frame to calculate, which is currently set to the monthly chart, and smallest time frame to calculate, which is currently set to the 15-minute chart. While this is a 15, then if you change to a 5-minute chart, then you won't see any zones on it. If I change that to the 5-minute, just for purposes of demo, generally I wouldn't do this because I think the 5-minute time frame is too small. Okay, that give it a chance to refresh the zones. And now if I look at the 5-minute chart, we have some of these aqua blue zones. And as you can see, it's very congested down at the bottom here, which with this zone across the bottom, this demand zone, which is holding price up above it at the moment. Okay, so I think I'll just go back to the 15-minute zone for the time being. If we go to the parameters, just make this a bit bigger by dragging that box down there so that you can see more of it. And if I just scroll down a little bit further past the zone filtering, you can see a section called Auto Trading. Now, first thing to say is Auto Trading Enable. You can put that to true so that this actually allows orders to be placed automatically against zones when price approaches them. Generally it will use limit orders. There are occasions, which I'll speak about in a minute, where it will actually use market orders. And that's when it's actually already in the zone but another criteria has to have been satisfied before that order can be placed. For example, it might be that it needs to be outside of a lower Bollinger Band. So just looking at these max and min time frames, this basically tells you the time frame zones which orders can be placed against. So the default is anything from the 15-minute to the 4-hour charts. Generally speaking, you probably don't want to do that many. For purpose of example, I'm just going to say the 15-minute charts, so 15 to 15, maximum to minimum. Underneath here you have trading restrictions. Now these are things that stop trading happening even though price might be approaching or actually inside one of the zones that you've classified as suitable for trading against. In this minute, the 15-minute zone. So there's certain things to do with the number of trades allowed, either in a day or against a particular symbol or against a particular zone. So the first here is maximum trades or orders per zone. Next one is maximum trades or orders allowed per symbol, so you could still have multiple trades against one zone if there were, for instance, multiple retests of that zone. Maximum time trades or orders allowed per time frame for each symbol, so that's saying that you're only allowed to have one order or trade per time frame. So for instance, 15-minute or 30-minute charts, when you only have one time frame set up to be allowed to trade, as we have in this example, we're using the 15-minute, then clearly you're not going to get more than or any orders placed against any other time frames than the 15-minute chart. Then have some maximum limits, so maximum open trades per day. These default to high numbers, 99. Hopefully you won't have any more than that per day. Maximum losing trades in a day, again 99, which basically means it's not taking much account of losing trades at the moment by default. And maximum winning trades in a day, so 99 again. So clearly you can change these such that if, for example, you had 2 winners in a day, then you wanted to stop trading. Or if you had 3 losers, then you may want to stop trading as well. Or if you had 5 trades opened, regardless of whether they're winning or losing, then you stop trading after that. Scroll down a little bit more, you have allowed trades if price is inside Bollinger Bands. So all this is saying is that if you place a Bollinger Band on the chart and you're looking at entering a trade at a supply zone above price, then that trade can only be placed when price is actually above the Bollinger Band. What this sometimes means is that the trade can't be placed until the price is actually already inside the zone itself rather than just approaching it. And that's the instance when you may get a market order being instantly placed rather than using limit orders that wait for price to approach it first. Just a quick note on the Bollinger Bands. The default setting for this is using a standard deviation of 1.75 and a moving average of a 20 period moving average. These are actually set further down the bottom in the miscellaneous settings. So you have Bollinger Band standard deviation 1.75, Bollinger Band moving average period 20. So you can change these as you see fit, or as you like. I like a standard deviation of 1.75 because obviously the default setting is 2, so I like to be in or out of a trade before it actually hits the setting that most people are using. Just scroll up a little bit further again and back to the trading parameters. So allowed trades if prices inside Bollinger Bands currently set is true. Obviously if you only want it to trade when price goes above the upper band or below the lower band, then you turn that to false. The setting below actually determines which Bollinger Band you're talking about, so whether it's Bollinger Band on the current time frame for the zone or whether it's on a specific time frame such as the daily. If you look here, you have different modes. So the zone time frame just means a Bollinger Band for the zone that you're trading against. The higher time frame means to the next higher time frame from the zone time frame, or selected time frame. You can actually manually select whether it's the daily Bollinger Band or the weekly or the 4 hour or whichever period you want. Or just default that to the zone time frame. A little further below we have another parameter based on technical value, this time the CCI. That's a common indicator that you can generally get by default in MetaTrader. It's the oscillator, and you'll generally only trade short if price with the reading is above 100, or trade long if the reading is below -100. Again, here we have a setting further down which actually determines the threshold value. It sets to 100 by default, but you can change that if you don't need the CCI threshold to be quite as extreme, or you need it to be further. It works on the same principles as the Bollinger Bands, in that even though price might be inside a zone, then it will only allow a trade or order to be placed once that criteria is satisfied. So if you're trying to go short when the CCI value is above 100, or another value that you've set further down. Similarly, if you want to go long, it will only set an order or trade if the CCI value is below -100, or value as you set further down again. Look further down, similarly you also have a time frame that is under consideration for the CCI value, and that works in exactly the same way as the Bollinger Band. So you have the current zone time frame, the higher zone time frame, or a manually selected time frame. Next one is the maximum retests allowed to trade. Now further up in the zone criteria, there's a maximum retest allowed to display a zone. The one I've just mentioned is actually used to determine whether zones appear in the chart in the first place, whereas this one is superimposed upon that first limitation and determines whether you can actually trade against a zone. The reason there's two is you may get a retest, which is a second retest, and sometimes if that exceeds the limitation, then once that retest has happened, the zone disappears, but you're left with a trade order or order showing on the chart. Sometimes I found it confusing when there's an order but no zone appearing, and I wasn't quite sure why that happened or which zone it related to. And this is why I separated the retest values between the zones seen on the chart and the retests allowed to trade against for each zone. So, just for example, you may want zones to appear on the chart if there's been 3 or less retests, in which case you set the zone restriction further up to 3, but you only want to trade on the first or second retest. So maximum retest allowed to trade would be set to 2 here. Allow trades if chart shows consolidation. This is just basically saying that if price is retracing or consolidating between 2 zones, then it will still allow you to trade. If you turn this to false, then it won't allow you to trade in this instance. Generally, I'd probably leave this on true, because just because something is consolidating, that actually sometimes gives a good opportunity to enter a trade at a better value than maybe if you're looking to do something like breakout trading. A little bit further down, maximum pip distance from stop for entry. This is a parameter which simply means that your entry can only be placed so many pips away from the stop. So this is useful if you have a very deep zone, which may be hundreds of pips deep for a larger time frame chart, such as weekly or monthly or even daily, but you actually only want to enter the trade when it gets to within 100 pips of the actual stop line on that zone. Now, this can be taken in 2 ways. You could argue that if it's gone that deep, then you don't want to trade. However, I think you're fairly safe on the first and even possibly the second retest. On the other hand, often when you approach a larger time frame zone, price will go quite deep into it, look for smaller time frame zones nested within that large time frame zones. So this can be used just to make sure that you really are going deep into that zone before a trade is taken. Moving down to the next section, you have TP or take profit setting strategies. The default setting is none, exit none, which means that whenever an order is created, whether it be a limit order or market order, then there's no take profit value set. Now, this may not always be what you want to do. You can change it to be exit at a fixed R, R being the distance of your entry to the stop. So you may want to set your take profit to be 2R or 3R or 4R, whichever value you enter. In which case you just select fixed R and select whatever multiple R's you want, and it will set the take profit value accordingly. A few other values you can do similarly as fixed R. You can do fixed number of pips. You may just want to be doing 100 pips if you're doing an intraday trade, possibly on a medium time frame such as the 1 hour or even the 4 hour. Have exit at fixed price. If you're just really focusing on one particular trade, you may manually enter a price that you want the take profit to be set at once that order gets created. Exit at next zone, that really looks for the next either same time frame zone as the trade is being placed against or higher. So if the zone you're looking at was a hourly 1 hour zone, then it would look for another opposing 1 hour zone or higher time frame zone that actually formed before the zone that you're trading against. So that's an important point to make there. The zone you're targeting has to have formed before the zone that you're trading against. The next two are very similar in nature. Exit and next current time frame zone, that's what CTF stands for. So if you're trading against a 1 hour zone, then you'll only look for an opposing 1 hour zone that formed before the zone you're trading against. Exit and next higher time frame zone is very like the next zone, the difference being they won't look at the current time frame zone. So if you're trading against a 1 hour zone, you'll only look for opposing zones on a 4 hour or higher time frame. So the following values after that are all related to this target mode, and they can be set accordingly. The only one that's slightly different is the initial target cap in R's. Always the same. It's for some reason you had a target that was calculated to be 20 R's. This would actually limit the target to be 10 R's in this particular instance. Going down to the next section, you have permitted trading times. Now this is to do with when the expert advisor is allowed to trade. First one, trading times, user defined hours only. So this allows you to specify times in each of the key sessions, being the Asian session, the London session and the New York session. At the moment, or by default, it's turned to off or false, so that there's no limitations on when the expert advisor can trade. You turn it on to true, then these hours start coming into play. So any one of these can exclude when trading occurs. At the moment you notice that, for example, Tokyo start and Tokyo end, so it actually ends before it starts, which means that trades can be placed at any time during the whole day, and this will override the London and New York start and end values. If any of these are for the whole day, then trades can be placed at any time. What you might want to do though is say, I want to trade Tokyo session from 8 o'clock in the morning to 3 o'clock in the afternoon, and this is in local Asian time. I want to do the London session from 8 o'clock in the morning to, let's say, 4 o'clock in the afternoon, and I want to do the New York session from 8 o'clock in the morning to 4 o'clock in the afternoon. By setting those times, that limits when you can actually, or when the expert advisor is allowed to place trades. So make note that the times you give are relevant to the particular session that you're setting the times for. So for Tokyo start and end, then these times are in Tokyo time zone. Similarly for London, and these times are in the London time zone, and New York, these times are in the New York time zone. Now sometimes you don't want to trade just before an official session starts or just after it starts, so these next two values say that you don't want to trade, say, 20 minutes before an official either Tokyo, London or New York session starts, and maybe 15 minutes after it starts. You might consider that to be a period where price is just finding its way and deciding which way it's going to go. Okay, next one is position sizing. This allows you to control how trades are sized in terms of how many lots you want to trade. So at the moment it's used to fix lot size is set to false, which means that position sizing is actually turned on by default. However, if you turn that to true, and then you can actually specify a fixed lot size. So at the moment, for example, it's just one micro lot. You may want to do 0.5 mini lots as a standard. If it's set to false, then it goes back to position sizing based on how much capital you want to risk, and you can set that value to be in this parameter, percentage capital to risk, which at the moment is defaults to 2%. Now that 2% can be based on the actual account balance at the time the trade is placed, which is the default value, which is why it says true, or it can be based on a fixed amount. For example, you may have a $5,000 value and you always want to use the percentage based on that $5,000. So this latter one's useful if you don't really want to change the total capital used for the calculation on every trade. Maybe you'll just adjust it on a month by month basis. Just balance down, that really, if you're using a position sizing, then that will adjust the balance down. If there's a conflict between the lot sizes there, I'll have to give a bit more detail about that later. And position sizing, this is like an overriding factor. So if any of the above parameters means that the position size is calculated above 5, then in this instance it limits the lot size used to 5 lots. So this is like a safety protection factor. A bit further down under this you have trade management. Now trade management can be used either with the automatic trading or by itself, even if you enter manual trades. So you need to turn it on before you will actually use it. So we set that to true, and it says only manage trades tagged with the EA identifier. And this is the identifier found at the very top of the list of parameters. I think in this case it's letmebefree.com, and what this does is actually check for that string inside the comment of any orders that are created. If this is true, then it will only manage trades with that string inside the comment. If it's false, then it will also manage trades that have no comment whatsoever put in them, which may have been entered manually. Okay, next down the line, dynamic exit strategies. Now we've talked about setting a take profit at the time of creating the order. In this instance, it's actually exiting a trade based on a particular scenario happening. For example, exit at opposing Bollinger Band. In this case it's false. If we put this to true and change this to say the 4-hour chart, what this means is that if you're entering a demand based on a demand zone for a 1-hour chart, the trade will automatically exit as soon as price gets above the upper Bollinger Band on the 4-hour chart. Next one here, exit if the immediate trend change. So this looks at actually the TDL change, which is the immediate trend, which I will discuss in a different video. However, really it's just looking for any form of retracement or consolidation to occur where close happens to occur below a close of a candle if you're in a long trade, or above the high of a candle if you're in a short trade. And once again, you can actually specify whether candles being considered on the daily, 4-hour, 1 hourly, or any time frame chart that you may care to use. Session based exit strategies, these are just controlling whether trades exit based on sessions ending. So for example, you can close trades or orders before each official session start. The official session start being 8 o'clock in Tokyo, London or New York. Or you can close trades and orders before the official Tokyo close, so 1700 hours in Tokyo time, and similarly for the London close or the New York close. And this all depends or ties in closely with the session hours that you've set further up in this list I've talked about before. Last value here, close only pending orders before official closes. What this means that if you've used these values here, so for example close trades orders before official London close, then rather than closing both trades and orders, you may just want it to close any pending orders and leave active trades running. So if we set this to false, then it closes both. If you leave it to true, it will only close the pending orders and leave those active orders running, just because there may be longer term trades, for instance. The last section here is stop loss management. So you can have trading stops. You can choose to lock in profit by moving stops up by a specific amount of R's here. So trading stops is fairly self-explanatory. You can turn it on true, and the time frame here, what actually happens is that the EA will move stops to behind, let's say you're in a long trade, behind any new support zone that forms underneath price. So in this case it only looks at daily zones or daily demand, if you're in a long trade it'd be demand zones beneath any demand zones that form on the daily chart. Maybe if you're entering against a 1 hour zone on the 1 hour chart, you may just want to use the 1 hour zone, so each time price retraces and then continues creating a zone, then price can be moved to underneath that particular zone just to protect your capital. The downside, of course, is that your trade may be taken out sooner if it retraces back to your entry, for instance, before continuing up, or some other scenario like that. Blocking profits is a very similar idea. However, in this case, it's not actually trading using a trading stop, it's just a one-off move. So, for example, once price is moved 2 hours, you may want to lock in 1 hour of profit. Similarly, if it's moved 3 hours, you may want to move your price to break even by setting that to 0. So it's pretty straightforward, and that's really how that works. So I think I've given you a quick summary there of the parameters used for auto trading and trade management. Hopefully that helps explain a few things and gives you an idea of the capabilities of this expert advisor. Thanks very much for listening, and we'll talk again soon.